Welcome, my name is Hafiz. I intend to explain the interview that baited SBF into a confession. He always slips out of his interviews by playing dumb and acting as if he doesn't understand the functionality of a business that he built from the ground up, but not this time. The entire conversation is super interesting to follow, but not if you don't understand the financial jargon being thrown around. I know exactly how it feels to want to consume a finance video, but have no idea what is being spoken about. SBF should be in prison, and I will help you understand why. Thanks to the hard work done by CoffeeZilla.
Tell us, yes or no, were you treating client assets just on the regular digital asset side different from the margin trading side?
What Coffee is asking here is, did you separate the funds like you said you would?
I do think we're treating them differently. There were a bunch of different sides. There were more than two sides there, but I do think that
Now imagine two baskets: untouchable money and risky money. The untouchable money is money that you'd expect to be treated like the money in your bank account, right? If you have money in your bank account, you're going to want it back the moment you request a withdrawal. The agreed funds are what we're focusing on now. Did you separate it like you said you would? Now, listen to how difficult it is for SBF to just agree to a simple question that was stated in his terms of service. I may also cut out most of these too, but listen very closely for the I think, I'm not so sure, I'm just guessing. My brother, how does a CEO know so little about something that he has built so much of?
If it's true that you didn't invest client assets, not even in treasuries, as you said via a now deleted tweet.
Treasuries are repurchased stock, in this case, crypto coins as well. SBF also promised to not reinvest client assets into his own business. A company purchases treasuries, invest in themselves when they feel that their company is undervalued, which is a healthy sign for investors. This increases share prices and reduces the number of shares in circulation. A repurchase of stock also boosts the EPS ratio, which can also help companies meet their earnings.
Why do those client assets no longer exist?
Now, what Coffee is asking is, if you promise to separate these funds that your investors are giving you, where is the sums of cash that you promised you wouldn't tamper with? You have separated them, correct? Okay, where's this one?
So I'm trying to trace through some of this. Here's my best guess, and I wish I could give you a more confident answer, but I don't have the data. But my best guess is basically it's a combination of the following. One piece is the transfer sent directly to Alameda Research.
What SBF is trying to do here is blame his bank, bringing in a third party into the conversation, trying to deflect the responsibility for misplacing the funds here. Honestly, at this point, he's doing a bunch of rambling by trying to involve the bank, something that Coffee did not ask him for, to deflect the responsibility here.
So people were sending money to Alameda instead of, they were getting credited on FTX, and Alameda just ended up using those funds, and they were never held separately per the terms of service.
Well, there was a separate legal agreement with that. I don't know the details of it. I don't have it in front of me, but there's a separate legal agreement with respect to transfers that were sent directly to Alameda Research.
Now, according to SBF's news story, the funds that were supposed to be protected have now been sent to the bank. So, according to his news story, the money was moved, which means that there is a placeholder here that's called credit. A credit is basically promised money saying, hey, you're going to get this back, but it's just not here right now, which is also against the agreement because those funds shouldn't have been touched. Just because you promise to give the money back does not mean that it will come back. Even in most large corporations, they have something called a write-off. When you sell something on credit, someone promises you all these funds. You take the total of all those funds, but you say, I might be missing 3% of those in total. This is what accountants do when they look at a business and say, hey, you might not get that back, so expect a little bit less. So a CEO on Sam's level should have known that even though the funds that he promised to give back were moved and are now being held on a credit basis, not all of it will return. Basically, this is all just another smokescreen to buy him some more time.
So people were sending money to Alameda instead of, they were getting credited on FTX, and Alameda just ended up using those funds, and they were never held separately per the terms of service.
Well, there was a separate legal agreement with that. I don't know the details of it. I don't have it in front of me, but there's a separate legal agreement with respect to transfers that were sent directly to Alameda Research.
At this point, SBF is denying responsibility because of a separate legal agreement that he doesn't know the full details of. He's basically trying to blame the bank that he transferred the money to for the collapse of those funds because they have legal agreements of their own, right? Why didn't they bring me my money back? You shouldn't have touched it in the first place, Sam. Now, at this point, Coffee just asks him to stay on topic because this is another smokescreen. We're not falling for it this time. You're talking to CoffeeZilla, my man.
I'm just taking a stab at this because I don't have the data, but my best guess is the following, is that there were a lot of those assets remaining. We processed something like, $5 or $6 billion, I think, of withdrawals.
Now, at this point, SBF is admitting that he was aware of the withdrawals being processed, which is the first chip in his armor. We're getting closer to him now. I can personally say that with confidence, he is lying about having several billion left over.
Over the few days prior to, or I guess the few days, during the crash. And there are still a few $billion of those remaining, I think, in the estate.
Billion is a huge unit. You can't just say something like, oh, I think a few billion, 1, 2, 3, or 5 of them. That's a large amount of money. Way too much money to be unsure of having. How is that? How can you possibly not put your finger on how many billions of dollars you owe to people?
And so you put those together, you have many billions of dollars of those assets. But I think, and so that's part of the answer, is that there were a large number of actual assets there.
To me, SBF is denying the fact that there is absolutely no funds left because you either have the billions or you don't. You can't just, oh, well, I think there's a few billion left over. No, he is denying the fact that there's nothing left and there is a very good chance that absolutely no one is getting their money back from this ordeal.
Is there one-to-one assets? Because that's the whole thing. We're talking about a separation of funds. So those funds should be in a different place, in a different wallet than everybody else.
Coffee now is basically asking on behalf of the customers who invested in him, where is my money? It's that simple. Where's my money?
What you talked about, servicing billions of dollars of withdrawals, has nothing to do with those specific digital assets because that's just first come, first serve.
Plenty, if not all of the money that was supposed to be in this basket has been grabbed by whoever came first, regardless of where their funds were supposed to be. Because now the two baskets were never ever separated to begin with, like he asked in the beginning of the interview. The two baskets here are now one, and now this one giant fund of depleted assets has been withdrawn from by whoever could reach it first, which is not part of the agreement.
So I think, and again, I'm just taking a stab here, but I think what happened is that if you look at especially a lot of the withdrawals that happened, those withdrawals were not necessarily only coming from people who never used margin trading or futures or staking or anything else.
Imagine your bank account right now, Chase, Bank of America, Capital One, whatever it is. Imagine you go to an ATM, you look at your balance, it's $1,000, and the bank tells you, you should have came earlier. There's $1,000 on the screen, but we're not giving it to you. There's no more left. At this point, SBF has spoken himself into a black hole. And it's only a black hole because it is CoffeeZilla he is talking to. SBF accidentally admitted to not separating the funds like he promised he would. This is the second chip in his armor.
But that means that there is no separation of funds. If there's fungibility between two different buckets of there are no buckets. It's just one bucket. Everyone's taking out of the bucket, which means substantially anyone who had your terms of service with digital assets wasn't actually subject to that terms of service. They were
Instead of separating the funds like we spoke about in the beginning, since Sam said yes, that was the case, remember? In reality, those two funds were never separated. They're all mixed together in this one gooey mess, right? The person who just wanted to store their money has been exposed to the same level of risk as someone who is gambling in a casino. And now, since withdrawals have been processed on a first-come, first-served basis, like the terms stated they weren't going to do since funds were supposed to be separated, it's all now there's one big mess. It's a cash grab. There is more money expected to be there by those who trusted this company than there actually is to pick from. Those who withdrew earlier are a little bit more satisfied than the majority who has nothing left. They are waiting for their ATM exchange on a bank account that says they have a balance with no cash coming out of it.
I can take the money that someone who didn't sign up to those same risky terms didn't agree to. Isn't that fraud?
So I'm specifically talking about what happened in the days immediately during and following the crash, in that 3 or so day period. And during that period, I think we may have allowed just generalized withdrawals.
May have allowed generalized withdrawals was the first admission to fraud here. Money was pooled together in a first come, first served basis instead of a protected, unprotected manner.
We wanted to treat customers equally. It was an incredible.
But they had agreed to different things, so you can't treat them equally. I mean, it's like, this is the whole problem of the story of FTX and Alameda, is all the funds were being commingled. Isn't this just another story of commingling funds, except this is now FTX, which you can't pass the blame to Alameda anymore. This is your company, your funds, that you are treating all the clients the same when they clearly signed up to different terms of service.
So I just want to respond to that. And please, I completely respect your question, but you have monopolized all of these discussions, CoffeeZilla. You need to let others speak, and you need to respond to what I'm saying and not grandstand as much here.
Now, this was interesting to watch because this is the first time that SBF has lost his composure to such a degree. Let me tell you guys one thing about human beings. Willpower is a currency, and it will run out. Coffee has drained his ability to continue lying.
I completely understand where you're coming from, but to answer your question, I didn't make a decision there. We processed withdrawals as we normally do until it became clear we couldn't anymore, at which point we shut them off.
CoffeeZilla here is now shaking with adrenaline because the conversation is over. If SBF could not process withdrawals, why did he mention still having billions left over? That's my question now. Wait, I know the answer, because it's a lie. There is nothing left over. Second confession is, he admits to watching the breakdown of his company happen, which means he can only know much more than he is trying to make it sound like. Let this be a warning to you all. Do not invest in a company that you have not done your research about. When you make an investment, what you are doing is buying equity. When a company falls apart, they are obligated to compensate for their liabilities, not their equity. When you buy a liability, you are owed the money back plus interest. Hence, a limited upside. When you buy common stock or crypto coins, you are buying and trading equity. Therefore, an infinite upside. SBF's victims will most likely never see that money again. Money doesn't just evaporate. It ends up in the hands of someone else.
This video is over.